Hump Day, and it's November 20th. We got a bunch of economic news releases scheduled for today. Remember, today and tomorrow are going to be very volatile days as we got a lot of important data that's going to be released these 2 days. So we'll start off today with the retail sales for the month of October. So we had a zero, basically nothing in the month of September, and the forecast for this month was, or October was basically zero, and it jumped up to 0.4%. So obviously it did pretty well in the month of October. Now, if you exclude the big ticket items like autos for the month of October, we had a 0.3% in September, and we figured that it would taper down a little bit in October, and it did. So it came in at about 0.2% increase when you exclude autos, the big ticket items like autos. Now we have this consumer price index, or also known as the CPI. This is the inflationary number for the consumer level. This is an important index that we look at. And the headline number, and this is the headline number. So we have a 0.2% growth in inflation, meaning things are costing more in the month of September. And forecast for October, it was supposed to come down to zero, and it actually came in at negative 0.1%. So it actually showed some contraction. Now, if we strip out what they call the food and energy from this, we get the core CPI. And this is the number that the Fed will actually look at, or most economists will look at, because the food and energy create so much volatility in the market that they just take it out and look at what they call the core. So back in September, we had a 0.1% increase in for inflation levels. And the forecast was supposed to go up to 0.2, and actually came in at 0.1. So again, the inflationary levels are still very, very, very tame, and it is still a concern for the Fed that it's too low, especially with the stimulations that they've been trying to provide with the quantitative easing and everything. That would typically kind of actually the concern would typically be maybe there might be inflation, but right now we're actually seeing the opposite effect. We also have the existing home sales for the month of October. So in September we had 5.29 million existing home sales. So it was supposed to taper down to about 5.1 in October, and it came up very close to forecast. It's just a hair above it at 5.12 million. So a decent number there, slightly better than the forecast, which is obviously very good. And then last but not least, we had the FOMC meetings from the last meeting back in October. Now, this came out at 11 o'clock Pacific Standard Time, and this is basically really affected the markets today, as most of the markets were doing pretty good today. We'll kind of show you in a minute, but how it affected the market. But essentially, what the FOMC minutes came out, it shows, even though the wording and when they gave their announcement after the meeting, this is kind of the behind the scenes of what's going on in there. And this kind of caught a lot of the investors by surprise, because basically at this meeting it was kind of indicating that a lot of the Fed members were kind of tossing around different ideas as to how they can end this, if they should start tapering, if they should start putting a date or amount of total purchases of mortgage-backed securities. They're throwing around a lot of ideas, and basically it's coming out that Bernanke and another one, Bullard, I believe it was, basically mentioned over the last 24 hours during their speeches that tapering is not out the table as of yet. So it is possible at the next meeting here in December there could be talk that possibly there could be some tapering taking place. So obviously that will make the FOMC meeting in December even that much more important. So as a result, we're going to go ahead and take a look here, and headline news is basically the stock market's down, and then we're going to take a look at the bond market and see what's going on over there. And as you can see, a huge drop. So we did start off the day towards the 10-day moving average. We started off lower than where we started, and we even, as you can see with this wick, we came up, even touched the highs of the 30-day moving average, touched that, and then when the minutes came out, now we're way down. We're down about, from where we started, we're down about, what do we see, about 52 basis points. So, and then even from earlier in this morning, it was even much greater than that. We're looking almost about 1 point in that arena there. So, obviously, worsening today. Interest rates had worsened today, so that's obviously a very strong disappointment. we'll have to kind of see how things turn out tomorrow. We do have some more important news tomorrow. We got the weekly jobless claims. We got the PPI, which is the wholesale level. We got manufacturing in the Philadelphia region tomorrow. So those are things that could also rattle the markets a little bit tomorrow as well. But as of right now, with the FOMC meeting or the notes, this kind of set the stage, and both markets are reacting negatively as a result. All right, so unfortunately, interest rates jumped up today, and we'll see if we can maybe get some improvement tomorrow. Thanks for watching, folks. Hope you guys have a wonderful day, and we'll see you guys tomorrow.